Mr. Chairman, I move to strike the last word.
Gentleman's recognized.
Thank you, Mr. Chairman. And without objection, I'd like to enter into the record a letter from the National Venture Capital Association endorsing this legislation, the Small Business Investor Capital Access Act.
Without objection.
Thank you. Thank you, Mr. Chairman. I would like to thank my colleague from New York, Congresswoman Velasquez, the ranking member of the Small Business Committee, for co-leading this legislation, bipartisan bill, the Small Business Investor Capital Access Act. Small businesses are the backbone of the American economy, and communities across the country, including communities that make up the 6th District of Kentucky. These small businesses need access to capital to grow their operations and serve their communities. Private funds are an incredibly important vehicle to ensure that these very small businesses can access the financial markets. Smaller funds, which collectively manage 0.5% of total AUM in the private equity sector, are burdened by the massive compliance costs that stem from SEC reporting. This inability to comply with these reporting requirements means that they must divert capital away from small businesses and startups. We must modernize our regulatory requirements for small private fund advisors so they can continue to invest in small businesses in each of our congressional districts, increasing access to capital for these small institutions. That's why Representative Velasquez and I introduced the Small Business Investor Capital Access Act. Currently, the exemption for SEC registration for private fund advisors is $150 million. This, however, has not been adjusted for inflation since its original passage in 2010. As we can all attest, $150 million is a very different dollar figure now than it was in 2010 due to growth in our economy and private capital markets and the historic inflation we faced from 2021 to 2024. The Small Business Investor Capital Access Act indexes the current assets under management cap to inflation every 5 years to ensure our registration requirements stay up to date with the size of the economy and growth in our markets. While there was not an inflation adjuster in Dodd-Frank, Congress has implemented adjustments for certain SEC regulations. This is doing the same. The registered market dwarfs the exempted advisor market, and therefore making this change will not reduce the regulations we have in place to protect the private markets, but it will provide relief for the smallest players and ensure our regulations are modernized to reflect growth in our financial system. The private markets are essential for a diverse, successful economy. Our small businesses rely on the capital that is formed through these small advisors. So, to protect small funds in the private markets and small businesses' access to capital, we must pass this legislation. I urge my colleagues to support this policy and the overall package. And with